as it was yesterday. The rallies into a correction mood. We have Asian stocks down today. We have major indices, the Dow, the S&P, and the Nasdaq all closed in the red yesterday, and revived basically by, or not revived, but kind of weighed upon by inflation fears. So the fact that we do have CPI, core CPI indicators today, this is the key inflation economic indicator, which is really, really important. It will kind of give us an insight to the Fed's timeline on whether or not they're going to increase rates perhaps before June next year. And so this is why it's kind of an investor's focus today, and also why stocks are heavily acting upon it. So ahead of CPI, we did see gold edge up actually 3.5% this week. Gold has been nudging higher. This is the gold chart. If we're looking at it right now, we are back to levels of 1826, and just hold on. So yesterday we did actually hit a high of 1832, and then we hit a low of 1819, but overall we did surpass the levels of 1830, which was a top resistance for many of you. And again today we're seeing a little bit of a downer for the gold, and that's because the dollar is again strengthening again ahead of CPI data due out today. So this is for gold prices. Let's take a look about the USD. So the USD has been falling it has been falling for 3 consecutive days, early since this week. And that is, we did have a really good Friday. I did write an article about it. It's on ATPREMIER if you guys want to see it, about what's happening in November. So we did have the Fed taper. We did have the Bank of England keep their interest rates steady, which was a big surprise to the markets, and we did see the GBP fall. We also were waiting for CPI data, and we're seeing a lot of, basically, we saw also major indices hit record highs. They did not continue for their 8th session today, but they did end with the 7th consecutive highs with the S&P, the Nasdaq especially. We're seeing commodities rally again, and that is because of crude stockpiles. So all in all, November has been quite a busy month. We were also waiting to see if the Fed is going to give us any signals on tapering or not. And right now, let's just quickly go over what is happening with the US CPI figures. So we have expected 0.6% versus the 0.4% that we've hit previously. So any number that would, any percentage increase onto that, then definitely we can see a sharp volatility in the gold and the USD today. So let's just keep and watch for that. Elsewhere we have, so let's take a look about the GBP. The GBP, we're back to levels of 135.64. Let's place new resistance and support. Okay, so just zoom in. It's really hard to place a support level because we actually didn't see this level in quite some time. Since last year December, we have not been in this narrow range, and that's why it's kind of a little bit tricky to put a decent support level, but I will anyway. Okay, let's actually add a new one, and I'll place it somewhere over here where it's touching the most end candles. So this would be my support. However, if I go a little higher, yeah. Okay, so my support level is at 135, and then we have our resistance at, we'll just move this one, and let's zoom out. Also, let's zoom more out. This is our support, this is our resistance. I would place it somewhere around here. Okay, it's exactly, actually, we are repeating kind of a historical pattern, but it's at 136, so it's a very narrow range of where we're heading right now. I think we should see a little bit of sideways movement. However, if the dollar does continue to drop, then we could see the GBP break free and break on top of that 135 handle today, and then back to where it was at levels of 136 and stay kind of steady. Also with the euro, we're still trading sideways. We're at levels of 115.75. I think we do have some, we had some GBP members speaking yesterday, UK members speaking yesterday, and that kind of affected the GBP a little bit, but I don't see any major sharp moves, so I'll not just, let's just skip that. So anyway, for the euro, still going obviously in a sideways movement. Wouldn't place any position right now till we kind of see a good direction to where we're heading. Let's see today, US CPI is really going to be a game changer for the gold and for the USD. We also have the USD JPY edging down, and we're back to levels of 112. Probably has a lot to do with what's going on in Asian markets. It's a bit of a downward. I want to see if I can find we did have the Chinese CPI, speaking of yen and yuan. We did have the Chinese CPI hit 1.5% versus 1.4 expected and 0.7 previous, so it like really jumped higher. This indicated really high inflation figures, and so this weighed on Asian stocks today, and I think it would continue to weigh on a lot of other factors. However, the USD CNY actually increased in price today by 0.3%. We also have the PPI, price producer index, hit 13.5% versus 12.2% expected and 10.7% previously. So we do have the AUD USD clinging to support after Chinese CPI and PPI surge higher. So we've seen the AUD cling onto the support levels because it was affected by Chinese inflation, and that happened basically in the Asian session, and so we're seeing a little bit of volatility on the AUD and perhaps on the Kiwi as well. It is downward, it is moving down as well. So all in all, this is what's happening in the markets today. Pretty much increased volatility with things changing a little bit just ahead of the CPI figures. We have actually Brent and WTI edge higher yesterday. We actually opened the markets today with a gap. Brent is actually trading at $84.7. We did hit $85 on the futures chart as well, and that is because we did see a draw in crude stockpiles from last week, and so it is kind of supporting oil prices. But again, it is whenever oil price is going to keep on climbing, we're going to see investors worry about inflation fears, and that's why it's all like connected today. So just keep watch of the CPI figure and expect to see very sharp moves in the markets. And anyway, guys, I'll see you tomorrow with more updates about what is happening after the CPI figures.